Ethereum, as you said, is programmable. It is really robust. The uptime is better than any other layer one blockchain for, especially with smart contracts. And so that's where Wall Street is coming in and saying, you know what? I want to tokenize a dollar. That's the stable coin. I want to tokenize real estate. I want to tokenize equities. Most of that is taking place on Ethereum. JP Morgan's choosing it, Robinhood. And that has led to the price recovering from 1,700 to 3,800. It's still below the 6,000 from 5 years ago. And if you inflation adjust it, it's like 9,000. So Ethereum is still super cheap.
So good buy then.
Yeah, it's a good buy. I think many banks are going to come out ahead. I mean, I think JP Morgan and Goldman are winners. I mean,
by sheer size or the work they put in?
They're smart. You know, JP Morgan's a super smart company, and same thing Goldman. I mean, any company that is good at trading is going to get crypto right.
You think so?
Yeah, 100%.
Crypto is now being embraced by governments, welcomed into the banking sector, and rapidly integrated into the traditional financial system. Why? Because now the institutions are making real money. From ETFs to stablecoins, crypto has transitioned from experiment to infrastructure. By the way, if you're enjoying this breakdown, make sure to like the video, subscribe, and drop a comment below. It not only helps the channel grow, but also signals to the algorithm to share this content with more people like you. Let's continue. Tom makes a bold claim: stablecoins are crypto's checked moment, a real-world use case that suddenly clicks with consumers, merchants, and institutions alike. Now let's watch more clips from the interview.
We've been recommending Bitcoin and Ethereum for about 8 years. And most of that 8-year journey, when Bitcoin was under 1,000, was that crypto was not considered legal or legitimate. And it fought a constant uphill battle to get regulatory recognition. But in the past year, that has completely transformed. And now crypto is not only being embraced by the government, but the banks are really running into crypto now. And they're embracing it because they're making money off the ETFs, but also because the stablecoin business has become the ChatGPT moment for crypto. It's been widely adopted by consumers and merchants, and now banks want to offer stablecoins. And most of that's taking place on Ethereum. So Ethereum, from talking to my institutional clients, has become the biggest macro trade for the next 10 years. Bitcoin and Ethereum should be friends because I think the community tends to be really fractured. There's ETH maxis or Bitcoin maxis, but Bitcoin really is proven itself to be digital gold, a real store value and a good way to move and actually move quite a lot of money pretty simply and move a lot of value. But Ethereum, as you said, is programmable. It is really robust. The uptime is better than any other layer one blockchain for, especially with smart contracts. And so that's where Wall Street is coming in and saying, you know what? I want to tokenize a dollar. That's the stable coin. I want to tokenize real estate. I want to tokenize equities. Most of that is taking place on Ethereum. JP Morgan's choosing it, Robinhood. And that has led to the price recovering from 1,700 to 3,800. It's still below the 6,000 from 5 years ago. And if you inflation adjust it, it's like 9,000. So Ethereum is still super cheap.
So good buy then.
Yeah, it's a good buy. An investor who's going to buy anything in crypto and in equity has to say what's worked in the stock market. And it's always been buying the winner take most blue chip company, right? That's why we have the Mag 7. So and as you said, Dan calls it Crypto 7. But I think that there's really good blockchains, but the ones that are dominant are Bitcoin, Ethereum, and maybe Solana. And in terms of crypto equities, MicroStrategy is the bluest of blue chip. There's Coinbase and Circle. In the Ethereum treasury world, the institutions are going to buy an Ethereum treasury stock over Ethereum because they can just make a directional trade in Ethereum, but they'd rather own a crypto treasury the way MicroStrategy was a 35x for them. So I think they'll pick the one with the largest market cap, the most liquid. Yeah. Currently, it's Bitmine with $4.5 billion in market cap. Ethereum generates a yield. So if you're holding it and you're staking it, you're getting paid for it. And that's what he's referring to. And you can reinvest it into more Ethereum, or you can treat it as net income, or both, because it is recognized as income from a GAAP. As long as it's properly done from a GAAP perspective, it's considered revenue and net income. What's an asset? What's a commodity? These are not clear definitions, but I think probably the simplest thing that your viewer has to think about is geography. That Ethereum is the same blockchain in any country, but we're treating it with different rules and with a different quotation. Stablecoins are helping change that, but it's very complex. So
the sovereign thing is a huge issue.
Yeah. So I think that regulators don't have an easy job. And if I can help, I will, and if I could help with policy, I'd be glad to. We're going to be we are the largest holder of Ethereum today, more than the Ethereum Foundation, because we have over $2 billion of Ethereum. So we want to make sure everything works. Stablecoins are a hugely profitable business because Circle is showing it, because they don't pay interest and they're earning 4% on their reserves. Coinbase is a very profitable company. It's done very well. But the Ethereum treasury companies are very profitable. When we do native staking, we're going to earn more than 4% native staking yield. So on the current Ethereum held, and we haven't disclosed what it is as of now, this minute, we've disclosed what we had yesterday. It's about $100 million net income business. Yeah. So,
and that's net income.
Yeah. It's
real net income.
It's dividendable net income, There's a lot of innovation that comes with crypto. I think that you have to think about crypto as it's Wall Street going onto the blockchain, but then it's AI making the digital world more acceptable. So crypto is the intersection of Wall Street and AI. So it's a really important place to be for the next 10 years. I think many banks are going to come out ahead. I think JP Morgan and Goldman are winners.
By sheer size or the work they put in?
They're smart. JP Morgan's a super smart company, and same thing Goldman. Any company that is good at trading is going to get crypto right.
You think so?
Yeah, 100%. As long as people are backing their reserves, there's no risk. And I think that's what the model is.
That's the key factor of the risk back.
Yeah, example is, you probably don't realize, have you been to Bermuda?
Yeah.
Okay, and you use Bermudian dollars, right?
Mm-hmm.
That's a stable coin, because the central bank does not guarantee that rate.
Really?
There is nothing backing a Bermudian dollar, but it's still equal to a dollar.
So we are already kind of living it.
So Circle is more secure than a Bermudian dollar. I'm not trying to offend Bermuda, but...
Tom closes with a high-level view. Crypto isn't just the next big asset class. It's the intersection of Wall Street and AI. In his words, crypto is Wall Street on chain, while AI is digitizing the economy. Together, these forces will define the next decade of innovation. And at the center of that convergence, Ethereum. From tokenization to automation, stablecoins to smart contracts, Ethereum is quietly building the rails for how value will move in the future.
The fact that an asset increases in price doesn't mean that the functionality got better. It just means that, there's more buyers than sellers, so the price rises. Look, I think the reality is, you said it's all politics right now. Politics and the idea that the government, and most notably the small sliver of the administration that's pushing this, really could say, I'm going to king make. I'm going to say this is the ledger we might use for this function, or we're going to put some of this in our strategic reserve. Despite the fact that there's no evidence of that, the rumors are great because Brad snapped a picture of himself at Mar-a-Lago, but I guess someone else snapped the picture. He was in it with the Donald. Again, I think absolutely you're right, Scott. It is the problem for Ethereum over the last couple of years has been this stall in the ascent of developer activity, new product activity, because Solana and other competitors came in that were arguably better and faster. I still have problems personally with Solana crashing on occasion. That's a bad trait in a blockchain. But I might as well piss off everybody this morning, all the armies. But
what are you going to say about Chainlink?
Well, I actually have nothing bad to say about Chainlink other than my absence of saying something good, they get mad at me too. So everybody gets mad at me. But the thing that I think is so striking about ETH is, Joe Lubin is involved in the foundation, obviously, as one of the big, early proponents, and he has this SharpLink Gaming treasury company, conversion. It now owns more ETH than the foundation, and it's never shocking when Peter Thiel shows up, given that the founder of Ethereum is a Thiel fellow. In fact, did I ever tell you my story about the back door? All right.
No.
When I first got exposed to Bitcoin back in 2013, I did what every good normal American, who is Satoshi Nakamoto? Googled it. And what pops up if you Google that is Intelligence Central, because Satoshi means intelligence, and Nakamoto is the surname of the families in the central provinces of Japan. That's kind of close to CIA. So I'm Googling this, which is probably bad because now I'm probably on every watch list in the world. As if I wasn't already. And so I'm like, okay, whatever. And what if the CIA created it because they knew the dollar was dead and that they were going to have to devalue it to infinity to get out of debt? Because once you have debt, you can either pay it back, can't do that. You can restructure it, can't do that because someone's got to take the other side. You can default on it. Well, you can't do that because then you get kicked out of office, or you can devalue it. That's what all empires have done. They've devalued. So what if they created this new thing to get all the dollars to convert in that, and then they had a back door and they just steal it all? And so Scott Stornetta, who's in the white paper, he's one of he's 3 of the 8 footnotes, is a venture partner. And so I ran this by Scott one day, and I get to the end of the story, and he's like, no. Like, Scott, you didn't even think about it. How can you say no? He's like, well, it's an interesting theory, and I wouldn't put it past him, and it could be the case. But the way you're thinking about a back door is impossible with Bitcoin because of the air gap. But then instantaneously, but with Ethereum, they could definitely do that. I was like, what?
So Joseph Lubin is Satoshi Nakamoto. Is that the moral of the story? I'm just kidding.
No, more that there could be some weird back. Yeah. Everybody knows the CIA story about all that stuff. So anyway, it's possible.
According to Mark Yusko, we're in the middle of a generational transformation of the global financial system. Bitcoin is emerging as digital gold, Ethereum is programmable finance, and stablecoins are becoming the gateway between the old world and the new. Institutions are no longer just experimenting, they're building, allocating, and generating returns. Ethereum, in particular, remains deeply undervalued and underappreciated, yet it's shaping up to be the macro trade of the decade. So if you're still viewing crypto as pure speculation, you may be missing the bigger picture, one where Bitcoin and Ethereum aren't just assets. They're the new pillars of tomorrow's financial infrastructure. Thanks for watching. If you found this valuable, the next video is even better. Click it now, and let's keep going.